Hey there, it's Sherelle again with Nitram Financial Solutions, where we teach bookkeeping without boundaries. So it's the end of the year. We have about 30 days left. And typically at this time of the year is when our clients tend to reach out to us for some tax planning support. Now, in my practice, we don't do any tax work. We only do bookkeeping, but some of our higher level and larger entities, we're able to give them some tax planning advice with the instructions that these are some things that we see and that we know you need to speak with your tax professional to see if this works with you and your whole tax picture, because I don't know or have and I'm not privy to the information of your entire tax return and your entire tax story. But and this is because I did taxes for several years and just decided not to do them in my current practice. And so I wanted to come on here and give you 3 really quick tax saving tips that you can take advantage of if you are a business owner. Just because you may or may not have a person, or if you just wanted a little bit of advice and you're kind of on the Google webs trying to find some information, I just wanted to share these 3 quick tips for you. They are pretty simple tips. They are tips that if you're trying to get your net income down, that you can utilize these tips to help do that, and it doesn't require a whole lot of calculations and so forth, right? So the first tip is that you can pay into your retirement plan. So I'm assuming you have a retirement plan, because at this point most states are requiring them. If you have employees, then you can put some money into your retirement plan and max out your contributions for the year. And I say that because majority of people, most small businesses, I have a statistic here somewhere because I wrote it down recently because I was flabbergasted about it, because I had no idea that 50% of small businesses, which means, and this definition of small business means they have less than 50 employees. So 50% of small businesses who have less than 50 employees do not have a retirement plan, which is crazy. And so a lot of states, as I mentioned already, are requiring business owners with employees to have a retirement plan. So I'm giving this tip assuming that you are not part of that 50%, but a part of the other 50% who do have a retirement account. And so with that, the tip is that you can max out their retirement contributions, because most people do not max out their contributions. Employees or employers typically will not max out their contributions because of cash flow and other things. But that's your tip. So max out your retirement plan if you have not already done so. A second tip is that you can prepay some expenses. So 9 times out of 10, your business, if you're a small business, is a cash basis business. And so you get to deduct expenses that you pay out during 2020. What is this? 2024. Expenses that you pay out this year, you can deduct as an expense on your tax return, even if the expenses are not to be used until 2025 at the time of this video. So prepay any expenses you can. It could be a software maintenance plan. It could be your rent. It could be any consultants, accountants, lawyers, anyone who you pay services to provide support to your business. It could be your insurance policy that maybe you have a few more months on that road crosses over years. You can prepay those. Anything that you can prepay, you can deduct in the current year. That will help get your income down. Now, subsequently, for people who are trying to actually increase their income because, Lord forbid, they want to pay taxes, or maybe they just don't want to have a loss for that year, then you can also receive prepayments from vendors, for people who pay from customers. You can have customers prepay your services so that you can get additional income in the door as well. So that one can kind of go both ways. And then the third tip that I had was to pay out bonuses. So we're at the end of the year. If you have a team of people who have supported you all during the year, then look at what their performance has been and look at what bonuses that you can put out. Now, I give the caveat, the little asterisk on all 3 of these is do not pay out more money to reduce your taxes. That will create a cash flow problem in the upcoming months. So a lot of times we'll send a financial statement to a client's tax preparer and they're like, hey, you need to max out your 401k, you need to do all these things. And at the end of the day, it's like, okay, so how are they still supposed to function in the next 30 days beyond the end of the year? Because this is going to deplete all of their cash, and the cash that comes in is not going to be enough to sustain them. And so I put the little asterisk there to warn you, if for lack of a better word, that do not pay out more money, so much money that you don't have the cash flow to keep the business afloat and to keep the doors open in the subsequent months. So if you don't have already the ability to have about 30, 60, or I would say at least 60 or 90 days, but I'll give you a little pass on 30 days of cash reserves to be able to support the business as the additional funds come in from clients in those subsequent months, then do not try to do these tips, because you're just going to create a cash flow problem for yourself. So be sure to check to make sure you have the cash flow to support you making any of these tips. And then, and as always, still make your estimated tax payment. So, make your state the payment in December if you can, because most states the deduction has to be paid in the current year. And then pay your federal estimated payment in January. Don't forego your payment just because you're doing all these strategies. Still do the payments and make sure that you have paid in enough so that you are covered and not charged penalties for underpayment. So those are your 3 tax planning tips for the tax year ending. And I will see you next time.